Hey everybody, it's Michael Martin. Happy Thursday. Um, Today isn't Thursday, but it's the day that I'm recording it and I'm showing it to you on Thursday. There's a couple of little questions here that have come up on the channel that I don't know what the author is getting at, so I thought I would quickly point some of them out. Um, One of them comes from Jean-Charles Savard. Came in on last Saturday under losing money versus losing behavior. Can you talk about the inconscient fear of money? Do you mean unconscious fear of money? I don't know what that means, so you can get clear. I don't want to guess because my time's valuable. Um, Brandon's too busy to be trading right now. He's a pro gamer. In terms of mental framework, I mean, I kind of talk about it every day. There's little nickels and dimes. I don't want to kind of repeat myself on it. This week too, I got super clear about what my behavior, what the results were from my behavior. When I wasn't getting the results that I wanted, I had to change my behavior. That means I had to be not hypercritical of myself, but I did have to keep a journal of like what was my expectation. Not just expected value, that's the outcome of the trade. Then you deal with the emotional, but what are my expectations for trading? What did I want it to do for me? At the beginning, I didn't want to go back to the blue collar despair that I was in. So I had to learn how to take bigger gains. Then you need to stick with the process. Then you need to learn about leverage, right? Because you really have to understand that the bigger gains come from bigger positions or they come from smaller positions, like I've been saying, that you hold for longer periods of time. Getting nickels and dimes every day isn't how you're going to build wealth. It feels good. You can go to social media, everyone's going to pat you on the back, but it's not a great way to build wealth. Um, got a couple of questions from a few people about Michael Marcus notes and this and that. I'm not going to talk about it here. I feel like that would be betraying his trust. I can speak with you about what I learned from him from an emotional and psychological standpoint, which I tend to do from time to time when it's fitting. But in terms of trading style, trading rules, this and that, that's absolutely not going to happen. Question from Jarvis Price. Once you started to become consistent, how did you go about setting yourself up for long term success in the industry? I acted consistently. So uh, that's what I did. I just figured out what worked and I stayed with it. I also realized like if I didn't have a trading edge, there was no point in trading, which is for the majority of you out there. I think you're stabbing at things, but you don't really know what your edge is, which is, you got to go through it, I guess, pen for the gold. But that's why I advocate doing very, very little, doing as little trading as possible. Do a lot of inward work. Um, yeah, here's another one. Could you share some things about Michael Marcus? Maybe I'll talk about some things about that are biographical that aren't necessarily in the public domain that speak nicely of him. But again, I'm not going to talk about the trading stuff. It's not going to help you anyway. It's just all voyeurism, right? It's like watching porn. You don't really care about that. It doesn't help you do the work. You should study yourself. Don't worry about anybody else. Institutions leave footprints. That's right. So when you're in trades and you are taking the risk home overnight, you can see, look at some of the prints. SA Capital, just wanted to say thanks for the chat we had a couple of weeks ago. Since then, I've held an incredible 2-week move for 800 points on the Nasdaq. Thanks for the boost of confidence and sharing your experience with us. Wow, good job. 800 points is no joke. And kudos for hanging on and staying with the trade. It works if you work it. So here's one from Adrian3501 on the Michael Martin Show, number 33, Why You Day Trade. What is contradicting is that if you aim to hold longer and keep your losses small, how do you manage when you're wrong or when you should hold on within a pullback, I think is what he's getting at. So to me, it's not about being right or wrong. That's like, again, you're looking for validation. If you know where your stop is, put in the stop and leave it. You don't know in the short term if you're right or wrong, but you have to protect your capital. Remember, job number one is playing superior defense. That's what separates, in many ways, winning traders from losing traders, is they don't respect the market. They don't respect their money. They don't know why they're trading in the first place. They think they want to make money, but what they really want is the intellectual understanding and the emotional wins of being accurate. This is not a game of accuracy. You need to be relatively accurate. So the best you can do is to stop thinking. Everyone who's watching the screen all day, you're overthinking. And it's a waste of energy. There's nothing that you can infer from short-term data. So great episode. This is from Headwind. This is on misconceptions about trading indicators. Great episode as always. Thank you very much. What would be your advice for discretionary approach to markets that can't really be back tested? Wouldn't, in that case, or at least a few indicators, be a must? No. Fucking no. Or pure price and volume. So this is where we get into, like, you should just look at this chart pattern. Ask the person who's touting that chart pattern to show you the expected value of the trade or to show you the back test. Because then otherwise it's like religion at that point. And what are you but for your faith? So are you going to put your faith in some jackass who's telling you something because that's conventional wisdom? I don't typically do that, as you can imagine. I do not have the temperament for it. Don't invite me to your cocktail parties or to speak on the dais. I don't make for a good guest. Yeah. So you have to figure that out. No indicators. They don't help you. They only confirm what you can see, which again is counter emotional for me because I don't want to be sitting at the screen. So if I'm not sitting at the screen, I can't even see the damn indicators confirming what I already know in the price. All I can do is put in my protective stop. That's the best I can do. Don't overcomplicate things. And if you get knocked out, who gives a shit? You have 4,000 more trades to make in the next decade. What do you care about one trade? It's because you want validation again, right? Again, so all this stuff is emotional. Let's see. Yeah, so here's one from Gary Portugal who makes a lot of. Hi, Gary. Thank you for making the comments that you do. Michael, the following came up in my mind as I listened to the episode. What about an episode on how to handle it when the market approaches a level that you have in mind? I don't have levels in mind. That's again me putting my will in the market that a 3R number is reasonable, and I want to be unreasonable. I want fucking 20 Rs. So that's why I sit on my hands, let the market go. If I get knocked out, okay, I had to ante to see the cards, right? I had to pay for the flop. To take at least partial profits. That's not my trading style. You know me. When I hit the wall, I want everyone to leave the party at the same time. Don't come back in for one for the road or a cup of coffee or whatever. So I piecemeal my way into getting the size that I want. Then I like to sit and let it go. When the market tells me the move is over, which is personal, and I'm not sharing that with you, that's when I know the party's over, the move is over. If you want a hint, you can look at understanding reversals. What do reversals look at it like at market tops? Go study that. And that's when you take all the profits. It wouldn't make sense for me to have, because I don't have any bad feelings around regrets, because I'm looking at the data very objectively. I'm not trying to interpret it, right? That's why I don't look at the charts. I look at the data. So, and again, you can get the data from Yahoo Finance for free. Call up your favorite ticker and get historical data. Put in the day range. It'll download in a CSV file, and then you can have at it. That answers that question. So, yeah, my own view on this is that risk management in that scenario is important. Yeah, I mean, Gary, you're a good guy. I appreciate you commenting. I think the last statement's kind of a truism. Risk management is the name of the game. You make your money on risk management, and that means position sizing. So I don't feel like I need to take partial profits. If the move is going, why do I want to have a fraction of the winning position? I want to have all of it because I'm clear about what my goal is. The goal is to grow the wealth, not partially grow my wealth. So I don't need the emotional win of like yeah, I just want to be reasonable, just want to be a good guy, take a little bit of profit here and then hold it on and then it goes higher. That to me would be regret. Having the thing move another 20% higher and I only have 2/3 my original position or some fraction thereof. If the thing is bullish and I'm in and I have unrealized gains, to me there's no reason to take those off the table. Again, different trading styles for different people, but we all probably have different goals. That's the difference. One's not better than the other, right? Tudor Jones and Peter, I think they doubled their money every year for the first 5 years. And there was one year where it was like 98% or something like that. And this might be before or after fees. I don't remember. So effectively say that they doubled their money. So $1 million became $32 million after 5 years. A decade earlier, the guys at Commodities Corporation were making 10 to 20 times their capital. And so which is better? Which is better? Hint, it's not about the rate of return. What are your goals? So again, I want to interject here because you have people commenting who have their own philosophy on things, and it's important to be able to differentiate this. A couple of days before, the same guy wrote, great episode, extremely, perhaps one solution is to have the position size large enough to be able to take partial profits. Again, that's not my style. After a significant favorable move. Well, what is that? Because that's a different number to everybody. If you're a day trader, $50 probably is a big deal. I don't get out of bed for that. While maintaining the bulk of the position for even a bigger move. And now you've got people, if you're using percentages, then the position size is irrelevant when it comes to exit rule. The math is the same. That part's true. But for me, when you think about risk management, what is it that you want your money to do for you? Right? I love people who say they're super bullish on Bitcoin, but they don't have a position on it. And in this environment, I don't blame them. The government seems to be not necessarily hostile, but it's not a great environment for making investments into those types of instruments right now because the rules and regulations about what they are there securities, how they're taxed, what's the legality. I don't like legislative risk in the things that I do. So the thing is, this is why I said it becomes super important to know what it is, what you want your money to do for you. Because there's not varying degrees of bullishness. These aren't shades of blue. To me, it's like if you're bullish, it's a green light. If you're bearish, it's a red light. Now, if you're bearish, you don't have to have a long position if you're not a short seller or a buyer of puts. Right? But there's no shades of green if you're bullish. You're either bullish or you're not. And so to have a fraction of a position and all that is, again, to me, it's overthinking things. It's making the situation in the process much more hard than it has to be. You see? Let's see if there's a couple of others. How much time have we been here? 14 minutes. All right. I've been going on long enough. So look, this is why I think it's so hard, is that people start to overthink at exactly the wrong time. The best you can do is put risk on, let the thing move, adjust your stop higher. How do you do that? I don't know. It's up to you. This is why it's highly personal. One way to do it is look at the average true range, look at the standard deviation, whatever it might be, and every time there's an incremental move up, if you have say a 20-point ATR in whatever instrument you're looking at, every time it moves up 10 points, don't think of taking profits. Just think of adjusting your protective stop up 10. This way, you're not really risking any more or less than you would have on the time that you put the trade on in the first place. So your risk is always consistent. That the fact that there's unrealized gains or not, to me, should be irrelevant. It's like if you're going to add the risk, think about that risk unit. Well, I want to risk, I got $1 million. My risk is 0.5% or 5K. So I always have a 5K trailing stop on the name. Because if I was willing to risk 5K when I started, why wouldn't I be willing to risk 5K at another point, especially when I'm making money? If I'm up 50K in the trade, to me, taking 45 out of the trade when it was up 50, what's the difference at that point? Because I knew if I took 15K, now even at 45, I've made 3 times what I was willing to make when I started. Now, a lot more could be said about this. I know I'm oversimplifying things, this is not necessarily definitive, but it gets you thinking about abundance. You need to have a plan to invite the abundance. If you're not doing it because you're taking small gains, that's okay. That's your life. It's your money, but you're going to stay small. You're always going to be that tiny 3R trader. Nothing wrong with it, if that's what your goal is. But doing that and saying that you want wealth, those things, again, they aren't congruent, and those are verbs that you can't, that have no conjugation. They don't go together. They don't go together. If you do small behavior, you get small results. I've said that 1,000,000 times. And I had to learn this all for myself by doing, which sucked. But I looked at the results that I was getting, and I realized I wasn't getting anywhere for all the work that I was doing, and it didn't make sense. That's why I mean when I say you're shoveling sand against the tide. It's a lot of work, and it doesn't get you anywhere. So think big, and make sure your goals are around a process, not a number or things that you want to acquire. What is the process that you can follow day after day after day that will invite that abundance, so that you can follow your system, whatever that system is, that will meet both your financial and your emotional goals? But it has to have a strong financial aspect. A lot of people think they have a financial goal, but their trading is really there to give them an emotional reward. So you have to be hyper disciplined and hyper aware of what it is that you're doing. Doesn't matter what level you're at. Do you want to, I like to say kind of Dr. Seuss like, do you want to be right or do you want to make money? Anyway, it's been a good week. Hope you're getting a lot out of this. I'm getting a lot of comments. I like to sit on them and listen inwardly and try to think, where in my life did I have these things happen, so I can speak from experience rather than just kind of get the questions off. So I'll probably address those next week just to give you an idea if you've written in and I haven't responded. But I appreciate the feedback. I admit I don't have all the answers. I only have my insight and my philosophy on life. That's what I teach to people. It seems to be working pretty well. If you'd rather go it on your own, then by all means, I think that could be a very rewarding experience too, because then you could say that you did it without anyone else's help, if that's what you want to do. At any rate, I appreciate you all being here, and I'll see you tomorrow. Okay, everybody, thanks for being here. Please take a minute, like and subscribe to the show. You could also leave a comment. I don't have all the answers, so it's good to get some feedback. Also, if you would like to support the show, check out the links below. You can get the free audiobook of The Inner Voice of Trading, and also information about the course that I teach with Victor Sperandio. Thanks for being here, folks. I'll see you tomorrow.